Hello and welcome to this brand new edition of Commodity Talk. This is Shivendra Kumar, and I have with me Mr. Ross Maxwell, Global Strategy and Operations Lead at VT Markets. Hello, Ross. Great to have you with us. How are you doing?
I'm very well, thank you, Shivendra. Great to be back here. It's always a pleasure. So, yeah, thank you for inviting me back.
Same here, same here. So, probably we'll be discussing about gold and silver. Ross, bullion is smashing all records and targets. Do you think gold will cross $4,000 mark by the end of this year, and same way silver will be nearing around $100 per troy ounce? What is your view on this?
Yeah, I think. Look, you're right. It's smashing all records. I had a look literally before we came on there, and it is literally at its all time highs. I mean, gold is pushing 3,900. Silver is pushing that $48 mark. We're at all time highs. So I think, are we going to see 4,000? It would be naive to sit there and say we're not going to. Especially with all the drivers still behind it, still very much on a bullish momentum. Even overnight, we've seen the US government shutdown, which is going to be another sort of like short term, at least, bullish momentum for gold. I think we will see some profit taken around that $4,000 mark. I think we will. I mean, you only need to look historically at silver and the reactions around that $50 mark in the past to know that we'll probably see some profit taken in there as well, just from a technical point of view. So I think, will we see sustained, sort of like a sustained price above sort of 4,000 on gold? I'm not so sure. I think certainly some sort of speculative move up there. And some profit taking is very, very likely, certainly with the momentum that we're seeing. But as I say, I would expect some sort of profit taking to come in around those levels. So I think anything up there would be short lived. If we see some sort of dovish sort of commentary from the Fed or any sort of indication of further future rate cuts or something like that, then potentially that is going to sort of like boost it again, and then you could see some sustained price up there. But if the landscape stays the same, I think it's going to be more. Are we going to see it? I would not be surprised at all. But whether or not we see sort of sustained price above there before we see some sort of like profit taken and a bit more of a meaningful correction, I'm not so sure.
Okay, so in India, return wise, there is higher returns in gold and silver because of the rupee factor.
Yeah,
and we've been seeing that rupee has been falling against the dollar.
Yeah.
And likewise, for people who want to invest, they have a problem because of the expensive or because of the rate which gold and silver is hovering. And at this point in time, we have a long festive season, and probably there will be a marriage season which will start soon. So just wanted to know, for clarity of our viewers, will it hit somewhere around 1.5 lakh gold by the end of this year on MCX?
No, I mean, to be honest with you, I mean, again, I had a look earlier on, and we're sort of trading around at 1.18 mark at the moment. So you're asking for sort of like a 25% push higher, which I think at these levels, like I say, I think we're starting to see, certainly from a technical point of view, where you're going to start to see some profit taken come in. So I don't believe, obviously the rupee factor will play a part in sort of like maybe driving the MCX price higher, but I think asking for a 25% sort of increase in valuation, I think is pushing it too much. I think, like I said, I think we'll see some sort of profit taking coming in very soon. Just from a technical point of view, we saw it at 3,000. Like, there's nothing fundamentally changing behind the drivers of it, but I just think from a technical point of view and from an investor point of view, there'll be some profit taking coming in into the market. So I think sort of 1.5 would be a push. Like I say, 25%. When you're already up at these sorts of levels, I think would be a push.
Okay. So the worry now with many investors who have short to medium term view is the price at which they are buying bullion, either it is gold or silver. So if, like you said, if meaningful corrections were to happen at some point in time, what to what extent would that correction be? And uh, given that the gold is in extremely overbought condition, do you see deep correction happening, if at all?
Yeah, I think we will see corrections. As I say, I sit there and say markets don't go up in a straight line. Gold pretty much has been going up in a straight line for a while now, pretty much. But it's, they don't go up in a straight line. We do see corrections. You're going to see some profit taking. It's very hard to predict exactly how deep that retracement will be. Some will be based on just purely profit taking. Deeper, if we see some sort of shift in sort of Fed policy, Fed commentary, some sort of shift in some of the fundamentals, you might see a deeper retracement. So I think my advice, generally speaking, would be to watch for these sort of like the commentary and the fundamentals driving it. Look for your technical levels. Like nothing's going to change it really in terms of the overall picture of being bullish on gold. So really, what you're looking for is if we see the retracements, where do we want to be looking to be getting in from? Where could these go to? And just from a technical level, you've got some support. You've got a really key sort of support area around 3,500. That would tie up quite nicely with a sort of a 10%, 10 to 15% correction, which would be more than reasonable to expect from sort of like just some profit taking and stuff. If you see a shift in some sort of like slight sort of shift in the fundamentals that can drive it a little bit lower, then again, we've got some technical support around that sort of 3,100, 3,200 area from earlier on this year. That ties in with a sort of 20% correction. So, these sorts of levels, I would sort of like, look to those levels for support. When the market pulls back into those areas, maybe look to see what is driving the market. If there's no real sort of like shift in overall sentiment of the market, then maybe that 3,500 will be enough, and that will hold it. If there's a little bit of a more underlying commentary going in, and it could go a bit deeper, I would look for that 3,100 to 3,200 area.
Okay, so are you surprised with the staggering rally that silver has seen? Last I checked, in India it was around 55, more than 55% of annual gains, which is historic. I mean, it has never happened.
Yeah.
So, and do you think fundamentals support this rally?
Yeah. So, surprised by the move? No, not so much. Again, we safe haven status, the sort of geopolitical issues going on, and that drives silver. It's lagged a little bit behind gold, so it had more potential for upside. We've seen some fundamental drivers in terms of sort of like industry demand picking up and stuff like that, especially through India with sort of like, the solar expansion and policies for renewable energies and stuff like that, which will support it. I think the only thing that I would probably sit there and say is a little surprising is the extent of the upside. It's been a tremendous run on silver. It feels like I was only talking a few months ago when it was breaking sort of like $35, and now we're already up at like nearly pushing the all-time highs again. So I think the extent maybe is a little surprising, but when you sort of like consider the factors, maybe not so surprising. It's been a bit of a sort of perfect storm for silver in the sense that, yes, you've got the safe haven of flows and investor sentiment going into it. You've had some industrial demand coming in for silver as well, which is going to push it. And if you look historically, the push on silver generally lags gold behind because of that industrial demand factor and stuff like that. So that's not surprising. Plus, I feel what sort of has driven a bit of this push as well is that because gold is so high, investors have seen a little bit more potential upside with silver. So rather than just investing in gold, the ratios between gold and silver have been out of sync as well. So there's been potential for more upside. So maybe investors have been weighting a little bit more towards silver than they have gold, which again has sort of like fueled the demand. So I think it's probably a mix of sort of some sentiment, plus you've got sort of fundamental macroeconomic drivers as well, which has created a bit of this sort of like perfect storm to push it higher. But whilst those factors remain, again, I guess just that err on the side of caution. Again, just looking historically at sort of technical levels, look at the reactions that silver's had when it's hit that sort of $50 in the $50 mark previously. They've had some really strong profit taking. So, and we're pushing those areas now. So that still is a concern for sort of like certainly the short term potential upside on it.
So what are your charts suggesting? I mean, will we see rupees 2 lakh per kg mark by next year, or I mean,
yeah, again, just coming back to that. Obviously, the rupee factor will play into it, but I do just think, again, we're coming to areas in the market where even if the fundamentals don't shift, we will see profit taken. And if you look at I'm aware of obviously the NCX and the rupee sort of valuations, but just from a dollar valuation point, you're going to see some profit taken, and historically at these levels, that profit taken has been quite sharp. So again, just from a psychological point of view, I think you'll see that again, which will cap sort of like some short-term price movements. And then I guess a lot will depend on, again, a lot depends on Fed commentary. A lot depends on whether sort of global demand and industrial demand for silver can push it on into next year as well. But fundamental drivers are not changing at the moment. It's just going to be a bit of more of a sort of technical profit-taking area, I believe.
Okay, so I mean, your recommendation will be to be cautious and just not go with the
flow. And I think I've mentioned it when I've been here in before, and I mean, I'm a big advocate of this, especially when you're sort of trying to you know, people need to have exposure to gold. People need to have silver. They need it to balance their portfolios. Getting those ratios right will depend on your risk tolerance and stuff like that. It's always very difficult to buy at the top, especially when, you know, even though like fundamental drivers might be suggesting higher. But, you know, the most sensible way to do it is to dollar cost average in, you know, keep yourself, have the exposure, but allow yourself that if there are these deeper corrections, which there are the potential for, then you allow yourself the room to be able to sort of more meaningful retracements.
Okay, so if you have to choose between gold and silver, given the current form, which one will you choose? I mean, we know the reasons. I mean, you've already stated that there is more upside to silver because gold is already overheated. But in case if you have to choose, what will be your choice between the two?
Yeah, again, I think a lot probably depends on sort of like your horizon. I think sort of like longer term horizons, I think gold for sure still will be the leader for it. So I think, you know, you only need to compare gold and silver charts. Like gold is a wealth storer. It goes up over, it's like US equities, it generally goes up over time. So I think if for a lot more longer term horizons, I think still gold is the leader. For shorter term, you know, yes, I believe we might be seeing some profit taking soon. I believe as long as the fundamental drivers are the same, then there is still, you know, that would be a really good opportunity for silver to get into in the short term as well, because you can see those bounce backs because of the fundamental drivers behind it.
Okay. So it is unlikely that equities will now be able to outperform bullion this year. So should one increase allocation in gold and silver? And if yes, to what extent? Like there has been a general recommendation or a general trend to have 10 to 15% exposure in gold and silver. So has it changed for you, or is it status quo?
No, I think that would be a reasonable sort of allocation for gold and silver, sort of 10-15%. Like the general recommendation normally is sort of 5 to 10%. You know, if you're looking for higher risk, then maybe 20%. Anything above that, I think is not reasonable. Anything more than 20%, I think, leaves you overexposed. I think generally speaking, though, yeah, that sort of 10 to 15% would be a reasonable allocation for gold and silver at the current things. You know, we've got, whilst again US equities seem to be on this like never-ending bullish run, there are some sort of headwinds there. Again, that and the valuations, you know, there's much less room for error on the valuations of US equities when we look at the, you know, the earnings predictions and stuff like that. You know, they're quite bullish earnings potential predictions for US equities. So any slight miss on that can create some deeper correction. So yeah, I think at the moment, I think sort of like increasing to sort of a 10 to 15% gold and silver would be a reasonable sort of allocation.
Actually, my question was from the Indian standpoint, because unlike the US markets, Indian markets have been under a lot of heat. Indian stock market, equity markets have been under a lot of heat. So, considering that, my question was if it will be more prudent for investors to increase their allocation in gold and silver.
So from an Indian standpoint, I guess we're seeing these sort of like outflows from Indian equities. However, again, I don't believe. I think it's going to offer a good opportunity for Indian equities in terms of their valuations and future projections and stuff like that. So again, it's about getting the weighting right. I think right now it probably is a good opportunity to increase your like to that 10-15% of your portfolio. But what I would sit there and say in regards to Indian equities or exposure to Indian equities would be to follow the macroeconomic drivers closely, because I think there will come a point when you want to reverse that and sort of like weight back into Indian equities as well. I think at the moment we're just seeing some sort of like some outflows because Indian equities had performed quite well, but actually I think the longer term, I think there's going to be a point when that balancing will have to switch back, and you can start getting back into Indian equities. I think right now that 10 to 15% balance would still be a reasonable part for gold and silver.
And so finally, your recommendations for traders.
For traders, for short term sort of speculative traders, again, use your technical levels. It's always don't just buy and ride the sort of like just because the bullish factors are there, and don't just try and buy because we seem to be heading to 4,000. Look for the technical indicators, look for the technical levels for all the time the bullish fundamentals remain. And then for investors longer term, it's sort of like understanding you need to monitor much more closely the commentary from central banks globally, and sort of seeing what the demands and stuff are. But be aware, dollar cost averaging, keep your exposure there, but keep it reasonable. And like I say, use those dollar cost averaging strategies to spread your exposure so that you're protected across every scenario. Basically, you're not putting all your eggs in one basket. You're sort of spreading your exposure.
Okay, thank you so much. This brings us to the end of our chat. It was lovely having you, Ross, with us. Take great care, and happy Diwali to you in advance.
Thank you very much, Ravindra. Thank you very much for having us again. It's been an absolute pleasure, and happy Diwali to you and your listeners as well.
Okay, thank you so much. See you.
Thank you. Take care.